Okay, good afternoon, everyone. I know you're back here again. We did this twice in a week, which we never ever do, but we have a lot of exciting stuff to go over. Yesterday was agent benefits, so we now have an agent benefits suite that you can take advantage of as long as you're an active Levinson agent. We also have the new exclusive Lead Star platform that we rolled out yesterday for the first time. So super excited about that. And then today, fast forward, we have our annuity webinar training, and we have some great stuff to talk about today. So what we're going to do, and I'll just switch gears for a second. So next week, yes, we are here. We are open. In fact, we're here Monday, Tuesday, and then half a day on Wednesday, so until 1 p.m. And then we are back in the office the following Monday. So we do not have a webinar next week, but of course we are here to help you with everything by email, by phone, whatever it is, just let us know. And we are here to support you every step of the way. But we are skipping a week when it comes to our training. So you'll see us back again for the week after Thanksgiving. So I do want to wish everyone a wonderful holiday week and weekend. I hope you all have a great time with friends, family members, loved ones. And most important for us is that you all give us the opportunity to work together. You're our customer, you're our agent, which is the same thing to us. As you know, we don't sell on a retail level, so I just want to give everyone a heartfelt thanks. What we also did in November is, in fact, we have a slide on this, is we made a donation, a significant donation based on our agents' production to Movember. Movember is a charity that benefits men's cancer, cancer research and helps those in need that are suffering from this awful disease. So as you know, October we dedicate to American Cancer Society, Breast Cancer Awareness Month, and then of course November is Movember. So we believe in giving back, and we also believe in making you our number one, and in turn the premium comes in, allowing us to do these great things. So thank you again for that. Okay, switching gears again, back on today's feature presentation. So if you're an annuity agent out there in the field, or maybe you're one of our life agents and you're saying, gosh, Bill, I really got to get more involved. You know, my clients and prospects and friends are buying annuities, just not from me. So I'm here today to make sure I know enough information to be dangerous, right? So I can sell my first annuity application and help more clients. So you're at the right place, because we have over 24,000 agents in the U.S., almost every city, and we have a turnkey platform for rookie or green or annuity agents. And then we also have built into this training dashboard, we have a series for the seasoned, more veteran type agent that's out there, that knows annuities like the back of their hand. So we have something for everyone, and it's all complimentary. We also have the most carriers and products, so anything B-rated or better. We have direct IMO contracts, and then with our new partnership through AmeriLife, we now have everything that we had before, right? Call it pre-partnership. Plus, we have exclusive contracts and products that are not available to any other agents unless they're with Levinson and AmeriLife. So there's some great stuff to come. I can promise you that. We also are launching, finally, our Firelight e-application platform, and we just launched the Affirm e-application platform. So that's on our website today. So we are super excited about the annuity department. What we're talking about today, and I know I'm ranting a little bit, is SILAC. So they have some great case study examples, great sales ideas, and some great products and some great niches that we're going to go over today to make sure you have the annuity industry covered from A to Z. So let's jump right in. What we're going to do at the end of the presentation is we're going to ask a question that has to do with the slides. Whoever answers first and correctly wins a set of Apple AirPods, plus our IUL prospecting book on us. So make sure you're on until the end. We're not going to be long today. We're going to get everyone out early so you can start celebrating as soon as we hang up, or call in if you have any questions. We'll make sure we get all the answers back to you Let's move to our first slide here. And what I want to talk about is the state of the annuity industry. And if you are involved, you already know about most of this, okay, which is great. Kudos to you. If you're not involved, right, and you're just starting off, number one, I recommend that you listen to my last podcast episode. I had Ron Smith as our featured speaker. He's also one of our top annuity agents in the country. He's one of the top annuity agents in the country, even outside of us. So premium-wise, he's crushing it. He goes on all the trips, MDRT, consistently. So check out that episode when you can. Also, Insurance Newsnet just published a great article on why annuities are booming. And here's what the next wave could look like for 2026 and some of the reasons why. So this is awesome. What we're going to do is send out a thank you email, and we'll include all of this and a link to this article in the thank you email. You'll have this sitting in your inbox tonight before we leave for the day. Okay? If you don't get it, let us know. That means we have your incorrect email, or it could be sitting in your spam folder. Let's keep moving forward. So what I want to do real fast is talk about our charities, our giving back. And again, you allow us to do these great things, you and our staff. So on behalf of all of you, another heartfelt thank you. I actually participated in a rally 2 weeks ago, and we made a nice donation on behalf of Levinson and Associates. I'm very proud of this. I'm very proud of everything that we participate in because, as we all know, it's about giving back to move forward, right? It's not rocket science. That's just the way it is. Some people get it, some don't. That's okay. We're going to do this regardless, and we're going to keep doing it every single year. Our goal is to make these charitable donations bigger and better each year. Let's keep moving forward. This is our newsletter. So you're probably scratching your head saying, Bill, you now have a health insurance department. You have one of the biggest life insurance departments and one of the biggest annuity departments. How am I supposed to keep track? Very simple. Every other week, you have the alert sitting in your inbox, okay? Our 411 newsletter. This covers everything from A to Z when it comes to new technology, new e-app platforms, lead programs, agent benefits, new carriers, right? Maybe if a product went by the wayside, okay, a carrier went by the way, whatever it is, everything is going to be here at your fingertips, okay? Everything that's involved with Levinson here in these four walls, and then everything industry related. Let's keep moving forward. What I want to talk about next is something that we all love, right? The end of the year, right? So here we are, fourth quarter, and like it or not, these carriers are all giving away a ton of money and incentives to get these apps in. Okay, so you as an agent, you've got to know what's available to you above and beyond our direct great compensation payouts. Okay, and if you take a look at the charts in front of you, you're going to see top left corner is SILAC. Okay, SILAC has a great offering. That's why we're featuring them on today's webinar. But what you're also going to see is our other direct carrier contracts and incentive programs. Okay, so again, we'll include this in our thank you email. And then in the bottom right corner, this is our MAP program. So as soon as you start writing annuities with us, you get to participate in our marketing dollars. We have E&O insurance that we now will help pay for, all right, depending on the contract that you're on. But as long as you're agent street level, right, with us, then boom, you are eligible. And ready for this? The best part, our new E&O product covers B-rated companies or better. Okay, that's huge. That's a big deal within itself. And pricing is great. And again, once you're writing, we will pay for your E&O for the year. Okay, let's keep moving forward. What I want to do next real fast is talk about our top annuity carriers. Okay, yes, these are all direct. We even have more now because of our new partnership with AmeriLife. This is everything that's in front of you. In fact, you'll see our new carriers rolling out by the end of this year. Josh runs the annuity department. RJ, another great resource. He helps Josh on the day-to-day when it comes to annuities and helping our agents. And then Michelle and Ashley K are on the processing side, contracting side. They are all 100% focused on annuity business for you. Okay, just know that. All right, let's keep moving forward. What I want to do next, by the way, I'm almost done here. I want to just make an introduction to our featured speaker. But what I want to tell you is to sit back, relax, take notes, use the Q&A pane for feedback, good, bad, and different. We need and want to hear from each and every one of you. If you're listening now live, or maybe in 2 weeks when this goes out, whatever it is, please send us an email. We want to hear from you, and that's what we create these webinars and trainings around, is your feedback. So please jump in. All right, without further ado, we have Katie, our Regional VP with SILAC, who's going to jump in and go over our feature presentation. Katie?
Great, thank you so much. And I just want to make sure, can you guys see my screen?
Yes, perfect.
Okay, perfect, yes. Thank you so much for the introduction. We are so excited to be here with you guys today and kind of talk a little bit more about our SILAC FIAs. Again, my name is Katie Aker, and I am really excited about, we have some new things coming up, and we also, like you highlighted, we have that commission special that's really exciting. You can earn additional commission on all SILAC FIAs through the end of the year. So it's really a great way to end the year strong. And we are excited. So it's for all, you can earn additional commission on all SILAC FIAs with approval dates of October 15th through December 31st. And this commission special can be paired with that inner circle to earn up to an additional 2.5% of commission on qualified premiums. So we hope that you guys are excited about this opportunity. And before I just jump into all the products, I first want to just highlight briefly all 4 of our FIAs that we offer here at SILAC. June 1st, we had a product realignment, and we really tried to make everything very simple for you advisors when you're selling these products. We didn't want to overcomplicate things and make it where you had to learn more about features that maybe aren't necessarily being utilized. We just wanted to make it super focused so they won where they need to win. So we have Teton and Denali. Those are going to be our accumulation FIAs. Really, the main difference between the two is Denali is going to have those higher caps and participation rates, because Denali has this feature called interest recovery, and I will go into that in more detail later on, but that really allows us to offer those higher caps and participation rates. We also have Elevation or Elevation Plus riders. Those are available on both Teton and Denali, and what that will do is it'll really open up liquidity with those cumulative withdrawals of up to 30% and an additional bonus. We also have our Evolve product. That's going to be our income focused FIA. And finally, we have our Vega. Vega really focuses on those future benefits. So we're talking lifetime, long-term income play, or that enhanced death benefit. The first product I will go into more detail about is going to be our Teton. Teton is our accumulation FIA, like I mentioned. Another thing that sets Teton apart from our Denali is that we have a 5-year option. And really, that is a great way to get these clients who are wanting to dip their toe into annuities, but not necessarily sign any long-term contracts. There are bonus and non-bonus options that you can choose from. And there's up to a 15% premium bonus available on Teton and Teton bonus with no additional charge. The max issue age for Teton and Teton bonus 5 is going to be 90, as well as that 7-year. For the 10-year, it's going to be 85, and for that 14-year, it's going to be 80. All products across the board have a minimum premium amount of $10,000. That's going to be qualified and non-qualified money. And this is a modified single premium product, meaning you can add additional premium contributions in the first 12 months. That minimum amount of additional premium in the first year is going to be $2,000, and the maximum total issue amount is $1 million without home office approval, but we will absolutely consider cases over $1 million. We will just need you to fill out that large case form that is available on the agent portal. So we are up there with a 20% premium bonus on Teton and Denali when you add on that Elevation Plus rider. And we still have competitive premium bonuses on our base products. So 7% premium bonus on that 5-year up to age 80, 10% on that 7-year, and 15% on the 10 and the 14-year terms. We have also banded the bonuses by age, so we still have bonus opportunities for those older issue ages. And again, keep in mind that these are for both Teton and Denali. Accumulation and liquidity, RMDs are available immediately. We also have those free withdrawals of 5% on Denali and Teton. And with the addition of that Elevation or Elevation Plus rider, those will double and going up to 10%. We also get those cumulative withdrawals of up to 30% with the addition of Elevation or Elevation Plus. Also keep in mind there will be an annual spread. Remember, this is a spread, not a fee. That spread will be 50 bips for Elevation and 1% with Elevation Plus. And really, if you're not familiar with the spread, what that means is, say my policyholder gets 0% interest credit in a given year, that spread will not be taken out, but if it was a traditional fee, that would be taken out. So that is something that we really pride ourselves on here at SILAC. We do not offer any fees, we just have spreads. Next, we have Denali, and Denali is great. For a long time, it was our #1 FIA sold, and for good reason. Denali is our super accumulation product with the highest caps and rates out of all of our FIAs that we offer here at SILAC. Denali has 7, 10, and 14-year versions to choose from, depending on how long of a contract your policyholder is looking to get into. Remember, Denali does have that interest or bonus recovery feature built in, and that is how we're able to get such high caps and participation rates. Elevation and Elevation Plus are available on Denali, meaning you're able to choose to add some liquidity to Denali with the cumulative withdrawals that are available with Elevation and Elevation Plus. Max issue age for Denali and Denali Bonus 7 is going to be 90, as well as that 10-year version, it's going to be 85, and for the 14-year, it is 80. Again, this is kind of repetitive, but like I said, the minimum premium is $10,000. Denali also allows for additional premium contributions in the first 12 months. So if you're in the bonus version and your policyholder wants to make an additional premium contribution, they will get that bonus on that additional premium. Minimum premium, of course, is $2,000, and maximum total premium is $1 million without home office approval. But like I mentioned earlier, if you have a policyholder that is wanting to contribute more than $1 million, you will just need to fill out that large case form and send it in to review. So that interest or bonus recovery, this is where I'm really going to get into what that is. And it really is a big differentiator between Teton and Denali. This is a unique tool built into Denali and Denali bonus policies that allows a product to provide that super accumulation factor. So when comparing a rate sheet, you'll see that Denali and Denali bonus offer higher caps and participation rates than Teton. And really, when you think about interest or bonus recovery, what that is, it's essentially a clawback of interest and bonus earned during that surrender charge period when the Denali or Denali bonus policies are surrendered early or there's an excess free withdrawal that is taken. So some carriers have annual fees built into their policies, which will reduce your account value each year upfront, and in turn will reduce the death benefit, free withdrawal, and other liquidity options. But with interest or bonus recovery, that allows SILAC to put the juice back into the account value, death benefit, and other liquidity options by not charging an annual fee for those rates. So really, sometimes interest or bonus recovery can seem scary, but it's really not. It will not affect your policyholder unless they leave during that surrender charge period or take out an excess free withdrawal. Next up, I have our Evolve product. Evolve is pretty much a mirror image of Denali. There are 7, 10, and 14-year terms to choose from. It has the same commissions as Denali, as well as the same premium bonuses as if Elevation Plus was added to Denali. It's just now its own line solely focused on income and the economic environment changes. So we can move the product to preserve its competitiveness for income, where before, when it was attached to Denali, say we got into a low yield environment where we now have to make a choice, do we preserve accumulation or do we preserve income? We just fully remove that complication, and Evolve is positioned to always be as competitive as it can possibly be in providing income. The max issue age for Evolve and Evolve Bonus 7 is going to be 90, for the 10-year 85, and maximum for the 14-year is going to be 80. Minimum premium 10,000. Again, that is standard for our SILAC FIAs. And Evolve also allows for additional premium contributions in the first 12 months. Minimum 2,000 and maximum total premium 1 million without that home office approval, but you could just fill out that large case form and submit that to us to review. So now let's go over that account value. Really, what is it made of? Of course, it's premium. So the premium that you put into the annuity and any bonus that is eligible. So if you purchase a bonus version, that bonus is going to your account value. And of course, your account value is growing from any positive interest credits earned minus that spread. You have a few different options on how you can access that account value. Of course, you have free withdrawals available, and Evolve is RMD friendly. So if you have a policyholder looking to satisfy that RMD, well, we don't necessarily allow free withdrawals in the first policy year, but we do allow the policyholder to take out that RMD at no penalty to the policyholder or the advisor. Evolve also has those health riders, that is the nursing home, long-term care, and terminal illness waivers. Those are state specific, but they are available with Evolve. So really check the highlight sheet for the state that you're doing business in just to see what is available. You also have that lump sum death benefit available, and that is your account value plus any positive premium bonus earned. So now your income value that you have on Evolve is really going to be a mirror image of your account value. Your income value is going to be growing from that premium plus any premium bonus available plus income credits. So you have those increasing lifetime withdrawals, level lifetime withdrawals are available to you, and those wellness withdrawals, also known as your ADL benefit. So if you have a policyholder that is unable to perform 2 out of the 6 activities of daily living, we will double the amount of income that they are receiving for up to 5 years. So if they have selected joint income, their income will increase by 1.5 times, but it is a doubler for those single income withdrawals. And with Evolve, that income value is growing with that 6% compounded roll-up rate plus positive interest credits earned. Evolve also has that interest or bonus recovery feature built in. I won't go over it again. It is the same exact thing that we just went over with Denali. So if your policyholder surrenders their contract in their surrender charge period, or they take out an excess free withdrawal, that interest or bonus recovery is going to apply. So you can see our Evolve product has very strong premium bonuses. This is a fantastic opportunity for replacement business, as these premium bonuses are credited to your account value. So the 7-year is going up to 13%, and the 10 and 14 years are up to 20%. So a 20% bonus on an income product. We are pretty excited about that. And last but not least, we have our Vega. Vega is a really interesting product. That Vega bonus contract has a 50% benefit-based bonus that goes right to the benefit value. So this is not an account value bonus. And the Vega contract alternately has very high multipliers of up to 300%. And that is how we are going to be growing that benefit value in multiples of interest credits earned. So on the Vega contract, if we're looking at a 14-year surrender, for example, we're going to be getting those 300% multipliers. So every time my policyholder gets a positive interest credit, we multiply that by 300%, and that is really what's going to be growing your benefit value. We also have those wellness withdrawals, also known as your ADL benefit, and unlimited enhanced death benefit in most states. So really make sure you pull up that product disclosure or that highlight sheet just to make sure that the state that you are selling in isn't compact or light, because those will be a little bit different and will vary by state. And of course, all of this is available on your Vega contract at no additional charge to your policyholder. So of course, at its core, Vega is a fixed index annuity. We are growing your account value based on the premium you deposited into that annuity, and that is growing with the interest credits that it earns. You have your standard liquidity options available. Your policyholder can take RMDs. They can take the free withdrawals out if needed. You also have that lump sum death benefit. So if your policyholder passes away and their beneficiary wants to take out that lump sum death benefit, that will be coming from the account value. We also have those health riders that are built into Vega. Those are your terminal illness, long-term care, and home health. And lastly, if your policyholder wants to surrender while they're still in that surrender charge period, you have that cash value option that they can walk away with. However, the account value is really not the star of the show with Vega. The star of the show is going to be a new account called that benefit value, which is the premium plus a benefit bonus that only gets applied to the benefit value and then enhanced interest crediting. So basically, guys, what we do is we take these account value interest credits and we enhance them or multiply them, and that is the credit that gets applied to that benefit value. I will show you guys an example of that here in a bit, but keep in mind that this is not a cash value and cannot be taken as a lump sum. So really think of it as a phantom account that is used for the benefit payout. You also have some liquidity options with that Vega benefit value that is separate from the account value. Of course, we have increasing or level lifetime withdrawals. Those are standard, and I'm sure you're all familiar with those. We also have those wellness withdrawals, also known as your ADL benefit. So if your policyholder is unable to perform 2 out of the 6 activities of daily living, they are able to double their income for up to 5 years. If they're receiving single income, or if they're receiving joint, it'll increase their income by 1.5 times. We also have that unique accelerated withdrawal feature that is available with Vega's benefit value. So really, this is an exciting opportunity for advisors who are getting the strategy where they're comfortable with Vega and maybe lifetime income isn't the focus, but they have a policyholder that is wanting to access that benefit value. These accelerated withdrawals is a great option for that. So on your Vega contract, that 10 and 14-year term, there will be a 10-year wait to turn on those accelerated withdrawals, and we will pay out that benefit value in over 10 years in 10 equal installments. And then we have that 7-year option. It's a 7-year wait, and we will pay out that in equal installments. So they're taking that benefit value in large chunks and paying it out upfront instead of waiting for a lifetime withdrawal. The most popular option with that benefit value is going to be that enhanced death benefit to your beneficiaries. And that is available at no additional cost or charge to your Vega contract. And this is what we get with that Vega. On the 7-year, we get a 250% deferral multiplier. For the 7-year, it's going to be, for that 7-year, it's going to be 250. For the 10-year, it's going to be 275%. And for the 14-year, it's going to be a 300% multiplier. Now, it really is a true trade. Instead of that benefit bonus, you have these higher multipliers until you turn on those withdrawals. That's, again, what we mean by deferral here. And then once you turn on those withdrawals, it'll drop down to 150%, 175%, and 200%. So if you're going to be deferring for a while, that 4% interest credit can turn into a 12% interest credit. So it's really clear here how we can get some great growth, and we can really look into some more numbers on this in just a little bit when I show you guys some case studies. Now let's talk about Vega Bonus. Vega Bonus is not a premium bonus. It has a big old benefit bonus that you guys are used to seeing in this segment of the market. Our 7-year product has a 50% bonus through age 80. We have a 150% multiplier. With your Vega bonus 10, it's a 50% bonus through age 80 and 175% multiplier. For that 14-year, it's going to be again a 50% bonus through age 80 and then a 200% multiplier. And this is your benefit value doubler. Your benefit rate is going to be equal to that account value interest credit times the benefit multiplier. So let's say that the account value had a 4% credit, you multiply that by 200% and you get an 8% interest credit to your benefit value. So really, it's pretty simple on how your benefit value is going to be growing exponentially compared to that account value. Next, I'm going to get into some SILAC case studies we put together to really show you guys how these products can work and some different ways to use our products depending on what your policyholders' wants and needs are. We first are going to look at an Evolve Bonus 10 illustration. We're going to be looking at an issue age of 60 with an initial premium of $100,000. The goal I kept in mind when I ran this illustration was lifetime income, but I wanted increasing lifetime income and waiting 1 year to turn that income on. For allocations, I wanted to keep it very simple, so we have chosen to do a 50% into the S&P participation rate and 50% into that fixed account. So in this case study, we're going to be looking at a 3.79% annual effective rate. Again, $100,000 deposit at issue, and we are deferring taking income until year 2. With Evolve, because we are getting that 20% premium bonus, our account value is already at $120,000 year 1. And you can see when we first start taking income, we're at over $3,000. And since we are selecting increasing lifetime income, by the time that our policyholder is at age 75, we're already above $6,000. So year 1, our interest credit is 1%, and that is showing that 1.5% spread already taken out. So if you want to see how we got that income credit of 7.75%, you would just take that interest credit of 1% and add 1.5% to it to show you that full interest credit that you earned, and then a 6% because you get that 6% compounded with Evolve, and that is how you get that full income credit. Remember, with Evolve, we also have those wellness withdrawals. So say my policyholder needs to start taking those withdrawals at age 65, they can double their income for up to 5 years if they qualify. So you can see if we needed to take that out, they would be taking over $8,000 and they can get that benefit for up to 5 years if they qualify. Now, let's say my policyholder passes away at age 75. Their beneficiaries can take their full account value as a death benefit, meaning they're able to walk away with over $117,000. Next, I'm going to highlight a Vega case study that's going to utilize those accelerated withdrawals. And again, accelerated withdrawals are a great option we can use to capture a younger generation and get past that stigma that annuities are just for older people. We also kept this one very simple at issue. Our policyholder is 55 and we deposited $500,000. And we also kept allocations the exact same as the last case study that I just went over with you guys. So with this case study, we are focused on those accelerated withdrawals. And on a Vega contract, that means you are going to have to wait 10 years before you can activate accelerated withdrawals. So at age 65, our account holder has been very patient and is waiting to turn on those accelerated withdrawals. So our account value is at over $694,000, and our benefit value is a little over $1.1 million. And that benefit amount of $1.1 million is what we are going to be paying out using those accelerated withdrawals. So our policyholder at age 66 will be paid over $119,000, almost $120,000 for the next 10 years. So we can look out at age 75, our account holders total withdrawal is now equal to that benefit value of over $1.1 million. So really keep Vega in mind if you have a policyholder that isn't necessarily looking for lifetime income, you can see that with Vega, you can choose this accelerated withdrawal, and it may be a great fit for those clients wanting their money faster instead of those lifetime withdrawals. Next, I'm going to cover a laddering strategy that utilizes 3 of our FIAs and how they can work together in achieving powerful accumulation and income. So this case study, policyholder started at age 55. We have a total deposit amount that we are divvying up between a couple of different SILAC FIAs, totaling $500,000. We are going to be looking at a Teton 5 with elevation. We are going to be looking at an Evolve bonus 10 for that income and that Vega bonus 14 for the wealth transfer and that death benefit play. We are keeping things very simple with allocations, 50% into the fixed and 50% into the annual participation rate. So like I said earlier, we are divvying up that $500,000 between 3 products. So for Teton, with that elevation rider added, we are allocating $25,000. Life's uncertainties is a concern for the policyholder. So we like that Teton with the elevation for that short surrender period of about 5 years. It's really going to be liquid in no time, but with Elevation Plus, we also get that boost of liquidity. And we know that policyholders don't often take those free withdrawals. Of course, it happens, but it's not going to be the number one reason a client is purchasing. But it's a great added benefit and comfort to know they have 10% free withdrawals they can take out if they need it. So Elevation Plus gives them all of this in a short surrender period. We're also allocating to Evolve for lifetime income. We are going to allocate $350,000 to Evolve bonus 10, and we are going to be deferring income for 5 years. So we will start taking lifetime withdrawals at year 6. And of course, with Evolve, our goal is to maintain a strong account value and this allows a policyholder some flexibility when it comes to the death benefit when it's at the end of the surrender period. And we also have Vega. We are allocating $125,000 with the focus being increasing lifetime income. So that Vega 14-year contract does require a 10-year deferral on lifetime income withdrawals. So we will start receiving income at year 11. You have that enhanced wealth transfer protection. So your beneficiaries have the opportunity to take that account value as a lump sum or that death benefit paid out in 5 equal installments over 5 years. It's good to keep in mind that we have $125,000 with Vega because Vega doesn't necessarily need to work so hard. We have those standing multipliers on the Vega contract, and that's really what's growing that benefit value exponentially compared to the account value. So we can be a little bit more conservative with the premium that we are putting in with Vega. So at issue, our policyholder is at age 55, and our initial account value is already at over $570,000. That is thanks to the premium bonus we are getting with Teton 5, with Elevation Plus added, and the 20% premium bonus on that Evolve bonus 10. And our death benefit is even higher at $633,000. Vega bonus earned that 50% bonus to the benefit value immediately, giving the policyholder a robust death benefit for legacy or income. So let's project out 5 years. The policyholder has been letting all 3 contracts accumulate interest, and we haven't taken out any withdrawals. Our account value has grown to over $662,000, and our death benefit is a little under $759,000. I'm also highlighting those different interest credits here. These are specific to that Vega contract to show that multiplier. So Vega earned a 4.61% interest credit to that account value, but thanks to the 200% multiplier, that benefit value earned a 9.22% credit. Our policyholder has been deferring and accumulating for 5 years, and a couple things have happened. First, our Teton contract is now fully liquid and is out of surrender. And second, our policyholder is ready to start activating income on their Evolve contract. That is a level distribution that started at over $27,000. So we're looking at a little further here. Policyholder started that evolve level distribution and 5 years have passed. The total income that we have received from Evolve is now over $137,000. Our account value is still strong and our death benefit grew. Thanks to that Teton contract, we aren't taking any distributions from, as well as a Vega contract. At this stage, our policyholder has reached the age of 65 and we're ready to start taking that Vega income. The increasing income distribution on Vega started at $16,600, and over the last 5 years, that distribution increased to a little over $19,000. So our annual income at age 70 is now over $46,000, and total income distributions over the last 15 years is now at a little under $364,000. So we're projecting out another 5 years. Income has continued to increase thank you to the Vega contract. We're now at over $54,000. Total income is now at over $620,000, which is more than our initial deposit amount. So really great income that we're receiving with this laddering strategy. We're now receiving more than we originally put into all 3 policies. That lifetime income is still increasing, $600,000, projecting at age 80. And annual income this year, total income received is now over $913,000. And we're looking out just a little bit further here. Annual income is continuously increasing thanks to that Vega. We're now at over $73,000, almost $74,000. And total income distributions is now at over $1.2 million. And we still have something in our account value to give to our beneficiaries as a death benefit. So as you can see, we have some great laddering opportunities available amongst our SILAC FIAs that maybe we didn't necessarily have before those June 1st product realignment. Premium bonuses being aligned made a great contribution to the laddering strategies, and also it giving Evolve its own standalone platform for those lifetime income. Hopefully I didn't go through that too fast for you guys, but I will end today's webinar going over our Inner Circle program. And really what that is it's our concierge customer service program. Keep in mind you have the opportunity throughout the calendar year to be enrolled into the Inner Circle once you hit that $2.5 million of in-force premium. That will get you concierge customer service, top of the phone queue, a dedicated toll-free number to call in and get expedited service, and faster processing on new business and post-issue service requirements. And with the Inner Circle program, you also get an additional bonus. $2.5 million of issue premium is the threshold to get you an additional 50 basis points of commission, all the way up to 2% when you hit that $10 million of in-force premium. And what we did is we took Inner Circle a step further with our Ember program. You're getting the same concierge service that you get with our Inner Circle program, but once you hit 10 million of in-force premium, you now also get to enroll your preferred marketer from your home office to be in the Ember group. And we use the Ember group as SILAC's advisory board. We want to meet with the field and use what you guys see and improve on our SILAC products. You have the opportunity throughout the calendar year, again, to be enrolled into the Ember program after you hit that 10 million of in-force premium. Also, before I hand it over, with the end of the year approaching, I just wanted to make sure everyone was aware of the RMD processing deadline. As a reminder for clients needing to have an RMD handled by year end 2025, all RMD forms must be in-house by December 15th. To ensure that the RMD is processed by December 31st. So that is all I have for you guys today. Again, thank you guys so much for letting me join you guys, and I hope you guys learned a little bit more about our SILAC products.
Great work, Katie. That was spot on. We appreciate you taking the time. What I'm going to do, I saw a bunch of questions come in. I want to get everyone out a little early today, so we will reply to every single person as soon as we hang up on the webinar. So I have a few other things I'm going to touch on briefly. How to get started. So you should know this by now, but it's right on our website. Just hover over contracting, and then you'll see annuities. And then SILAC will be one of the options. If you're already with an IMO or BGA, you want to transfer to Levinson, take advantage of the cash for contracting or orphan leads for contracting. So you get to pick with your first paid application. We send you the leads or the cash. Okay, so very important stuff there. On top of that, you get our complete value add platform at no charge. Let's keep moving forward. So this is great for training. I mentioned it earlier. If you're greener in this space or you're a seasoned pro, I promise you, you will learn something from our training dashboard, and here's why. So if you're brand new, you're maybe a pro in the life space and you want to start writing annuities, we have a 101 course that takes you through everything from A to Z. When you finish upon completion, you pass, which it's like an open book test, very simple. You get a certificate of completion saying you're now a Levinson annuity sales professional. You will email that. You can also print it, frame it, use it in your desk, your signature, whatever you want. Okay, but it's great for those newer agents. Also, on the bottom right corner, we literally sat down for an 8-week workshop with Coach Charles. So he invented the 60-second napkin close. It's awesome. So we take you through a complete sales presentation, okay, with a group of select agents, and we go through every type of sales scenario. If a consumer says, oh, maybe this isn't for me, we talk about other questions to ask, other solutions. So it's fantastic. Even if you're a pro, you will get something out of this course. This is all part of our training dashboard. Let's keep moving forward. I want to talk about leads, right? We all want to know more about annuity leads. So we negotiated a great co-op discount with our third-party lead vendor. So we have a few options. We have seminars that are turnkey, and then we also have a mail or drop program where everything goes back to you as the agent. There's about a 2% return on the average. So both of these programs work great. Depending on where your mailer is dropping, obviously the return can change, but anywhere from 1 to 2% is the latest result. And then, of course, if you're in a more populated area, your chances are a little slimmer. If not, the chances go up. But these are great options just to get the story out and share your pitch, and then obviously go from there. Let's keep moving forward. I want to talk about the new e-app platforms that are available to all Levinson agents. So real fast, on the left-hand side, Firelight is awesome. It works with most of our companies, and it saves you so much time. And when you think about, in the past, if you missed something on an application, if you had to go back to a client after the fact, we all know nobody likes to do that. Well, this simplifies your world, and it's free. So Firelight is coming out. It's already in the programming stages. It should be rolling out the end of November or early December. But I promise you, 2025, you will have full access. On the right-hand side, a firm for annuity we just rolled out a week ago. So that's on our website currently. We're starting with just 3 carriers, but it's enough for you to jump in with their 3 core companies and just get comfortable with the process. In fact, it's the same system as IGO. So with iPipeline, I'm sure you've used IGO, our e-application system. Same exact setup, just for annuities. Right that's now on our website. It's all single sign-on. So again, it makes your world so much easier. Let's keep moving forward. I want to talk about sales ideas. I want to talk about social media posts in the annuity space that are doing great. And you should and could be doing the same exact thing. So this sales strategy, real fast, makes things very simple. Okay, this talks about you as an annuity agent going back to your book of business and looking at other products that you sold maybe 7 years ago, 5 years ago, and then looking at the new FIA products with an income rider that pay out a lot higher bonuses, higher percentages, to where you can have this conversation and show the difference on, let's say, the product from 6 years ago versus today. It makes for a slam dunk sale every single time. Okay, we talk about some other bullets below, things you need to be aware of. But if you do have a guy or have a girl, you have a case, pick up the phone, call Josh, call RJ, and we'll help you finish the case and hopefully get the application. Let's keep moving forward. I want to talk about two social media posts that are performing extremely well, especially when you think about annuities, right? It's such a small niche. And when I think about social media marketing, I think about education, right? And that's how you should look at this. The consumers don't know anything about annuities, or maybe they heard a rumor, right? Maybe they did a search on AI or Google, whatever it is, but you are here to educate, right? And the left side, if you want to check this one out, it's not rocket science, right? Annuities. You've heard the word. Here's what it actually means, okay? And then there's 4 slides that go along with it. And what's so simple about this is it just talks about what's the difference between a MIGA and an FIA and an income rider and a long-term care rider, or maybe it's a annuity with a death benefit rider and a living benefits rider attached. Just very simple concepts. And consumers say, wow, tell me more. I didn't even know this was available. And there's no underwriting. This is great. So just that alone produced 100 new prospects for the agent. Okay, between the likes and the shares, over 100 different consumers said, hey, tell me more, or they liked the information, which means you as the agent can reach out to say, hey, I saw you liked my post. Do you have any questions, right? It's a new free lead done. Right hand side, what is an annuity? Okay, going back to educating, right? Remember what I said. An annuity is a contract with an insurance company. You put money in, it grows tax deferred. You can turn it into guaranteed stream of income. Hello, almost 200 consumers or prospects liked, shared, or commented. Okay, I think you can do something similar today. All right, that's my challenge to every person listening right now. Right, I see we have hundreds on. That's my challenge. Create something like this afternoon. Get it out there. If you get 2 likes, right, and one of them wants to set up a Zoom call or a face-to-face, you won, and it costs you not a penny. You get the point. Let's keep moving. Okay, now, if you're a pro, even if you haven't written an annuity yet, I promise you, by listening to this podcast, episode 62, you will walk away with some sales ideas or nuggets, right, that will give you the energy, the confidence to make your first sale or your first post or seminar, whatever it is. Okay, Ron Smith is crushing it. Also, he will be at our expo on April 17th. So if you, hopefully you're going to be there. By the way, speaking of our expo, we're going to have 3 carriers that are presenting at the expo, first time ever. So we're going to have the life side, the annuity side, and now the health department side. First time we have done this. So we are super excited. Anyway, point is, check out episode 62. It's free. And I'd love to know what you think about that episode as well when you're finished. Let's keep moving. We have my second to last slide, and then we'll have our giveaway real fast. So we have 3 training webinars to wrap up 2025. 3 things you need to know. Augustar Financial is doing a relaunch. They have some great niche products I think you will love. That's on the 4th, just under that. So Coach Chris is an independent annuity consultant. What I love about him, we have him on every quarter. He gives us the 100-foot overview of the industry, of what's working for other agents. What are some of his top carriers that he loves and top products, right? Because he's working with a bunch of agencies all over the country, but he's not tied to one specific carrier. So I'd love to get his quarterly reviews. It gives me some insight too on the industry as a whole, and for agents, it's a no-brainer and it's free. So you got to be on that one, the 11th, just under that. That's where we are diving in. This is the 18th, our final webinar of the year. We literally handpick the top 10 webinars, top 10 sales ideas, products from the life and annuity side, technology, sales platforms. We're going to talk about AI this year. We're going to talk about everything you need to know to grow your business as a life, annuity, or health agent, period. Okay, so that's one you also don't want to miss. My last slide here, we'll put a bow on this. I want to talk about, on the left-hand side, my Positive Tuesday quote. Sometimes we forget that having someone in your life who genuinely cares about you is the ultimate gift that cannot be replaced. Just a gentle reminder, a mentor, a parent, it could be a sibling, whatever it is. Reach out and say thank you today, not by text, by a phone call. Okay, it's all about giving back. That's our Toys for Tots annual contribution. We're doing that again this year in December, so super proud of that. Let's move forward to our question of the day, and I want you to get your little fingers on the keyboard because you got to be quick and you got to be correct. Okay, my question of the day. I mentioned 2 complimentary annuity e-app platforms we are launching this year to you. Tell me the names of the 2 annuity e-app platforms we're launching, complimentary, 100% free to you this year as a Levinson agent. Tell me the names and you win. Apple AirPods, IUL Prospecting Book. Andrew's going to tell us who was first and who was correct. Do we have a winner, Andrew?
All right, we have Jonathan C. Jonathan C.
Jonathan C. Like Charlie, the answer was Affirm for Annuity and Firelight. 1 platform is available now. 1 is coming any day now. It should be within the week or 2. Let's all have a great Thanksgiving holiday. We will see you when you return. Any questions at all? Again, we're going to be here next week as well until Wednesday at 1 p.m. Email, call, whatever works for you. Thank you for your business. Thank you for sticking with Levinson throughout the year. We're going to have a bigger and better year next year. I can promise you that, like we always say and do. Great selling. And again, we're here for you every step of the way. Thanks again.